Hello, I am Karen Herba, Managing Director of the Retirement Planning Services Division of Christian Brothers Services. What follows is an overview of the Christian Brothers Retirement Savings 403(b) plan for the Diocese of Des Moines. In addition, I will provide a brief overview of the Vanguard website. The Retirement Savings Plan is a multiple employer church plan that was started in 1995. We currently have $710 million in assets and roughly 19,000 participants in the plan. For the Diocese of Des Moines, in order to be eligible, you must be working 20 or more hours per week, and you can start saving in the plan immediately. Once you're enrolled, you can roll over money from a prior plan if you choose to do so. We at Christian Brothers Services are not investment advisors, so we won't be able to give you any advice on whether you should or should not roll over. We just want you to know that you have that option. So you can save up to 100% of your salary, offset by any employer contribution. The contributions are pre-tax contributions. This lowers your current taxable income, but you will owe ordinary income tax on these contributions and their earnings upon withdrawal. The IRS sets maximum contribution limits. So currently for 2022, the limit is $20,500. For anyone age 50 and older, you can also contribute an additional $6,500. Please keep in mind that it's the calendar year in which you turn age 50 that determines when the $6,500 can be contributed. So it's not after your birthday. If you turn 50, anytime during the year, you can start those contributions, those catch-up contributions in that calendar year. For lay employees, for employers that are part of the diocese, they will provide a matching contribution of 50 cents of each dollar saved up to an employee's deferral of 8% of pay. So here are a couple of examples. If you save $100, the employer will provide a match of $50. If you save 4% of pay, the employer will provide a match of 2% of pay. If you save over the 8%, so say 10% of pay, the employer match is capped at 4%. So here's an example. Let's suppose you earn $52,000 and you're able to save 8% of your pay annually. Your employer will match 4% of pay. So assuming a biweekly pay period, your pay is $2,000, you save $160, and your employer gives you $80. So over a year, you've put in $4,160 and your employer has put in $2,080. You are immediately vested in your own contributions. As far as the employer contributions, there's what we call a 3-year vesting. So after the first year, you've earned a right to 33% of the employer contribution. After 2 years, it goes up to 66%. And finally, after year 3, you're 100% vested in all employer contributions. So why not save? Here's an example of how it helps you on a pre-tax basis. So let's assume you're not saving and your gross pay is $1,000. Let's assume your tax rate is 20%. So your take-home pay will be $800. Now, if you decide to save $50, because that $50 comes off of the gross pay before taxes, then your adjusted gross pay goes down to $950. The tax rate's the same, 20%, so your take-home pay is now $760. But the differential is only $40. So you're saving $50, but you're only impacting your paycheck by $40. And keep in mind, the employer will match your contributions, so that's free money. And we'll see on the next slide the power of compounding. The sooner you can save, the more the compounding of interest can help you. So start with a small, manageable amount and see how you can increase that over time. So here's the power of compounding example. Assume Jill is 25 years old and she starts to save immediately $50 per pay period. And then there's Jack, who's also 25 years old, but he decides to wait 10 years and then save double the amount, or $100 per pay period. So over that time, from age 25 to 65, Jill will be saving $50 every pay period and will accumulate up to $268,000. Jack waits until he's age 35 to start saving, and he'll also be able to accumulate about $250,000. Now, that may not seem like a big differential in the end, but it's the amount of contributions that need to be saved. Jill only needs to save $52,000, whereas Jack needs to save $78,000 because by waiting, he doesn't have that power of compounding. So as you save, you have a default investment. As soon as you join, the default investment is the target date fund nearest your 65th birthday. If you're already over age 65 when you join, then your automatic default is the target retirement income fund. But you can change your investment election at any time once you've registered with Vanguard and by logging into your account, or you can call Vanguard at their 1-800 number. There are several options for investments in the plan, and we've tiered them in Tier 1 for the target date funds. Tier 2 are index funds, which are cost-efficient, risk-adjusted. There's the Tier 3 funds, which are the Catholic screened funds. And then there's broad active funds. Just as information on the target date fund, what that fund means is that if you're targeting age 65, and let's say that's age 2040 or year 2040, then the fund will naturally be shifting risk away from equity and into fixed income the closer and closer you get to that target date. So you can set that target date fund and never have to make any adjustments in that fund because it will automatically shift risk from more risk to less risk as you get closer to your retirement age. But if you want to manage the funds directly, that's where Tier 2, 3, and 4 come in. So again, you can change your investment elections at any time. And you can do this with respect to future contributions or outstanding balances, or both. So once you've saved, you can start withdrawing money out after you retire. So normal retirement age, 65, early retirement age of 55. If you're still working and you're over age 59 and a half, you can also withdraw. If you die, then your beneficiaries are entitled to the funds if you become disabled. If you terminate employment, you can certainly take the funds and roll them over to another employer, or if you have a financial hardship. But keep in mind that on distribution, the benefits are taxable. A financial hardship is deemed an immediate and severe financial need. Our plan follows the IRS rules for financial hardship, and these are the categories that are allowed for hardship. For college education for yourself or spouse or dependent, for the purchase of a primary residence, to prevent eviction from a primary residence, to cover deductible medical or dental expenses, to pay funeral expenses for a dependent, or to repair damage to a primary residence. Again, normal taxation applies, but it's also subject to a 10% excise tax. So you can withdraw all or part of your deferral savings, but not the earnings and not employer contributions. Keep in mind, you start the hardship process by contacting Vanguard, but then you send all the paperwork and supporting documentation to Christian Brothers Services for review and approval. As far as fees are concerned, there is a quarterly administrative fee of $18 per quarter, and these are deducted from your accounts. There are also investment expenses, which are referred to as expense ratios. And our expense ratios are lower than the industry average. And on average, it's about 19 basis points. So what that means is if a fund earns 7.19% and there's a 19 basis point expense ratio, then your account goes up by the 7%, and then that 19 basis point fee goes to pay the fund managers. All in, our fee is 35 basis points, which is, again, significantly lower than the industry average. Something to be aware of, Vanguard produces quarterly statements, and on quarterly statements that are coming up after June 30, 2022, they're going to be adding an illustration for lifetime income, a stream of payment on a single life annuity basis or a qualified 100% joint and survivor annuity basis. So be on the lookout for that on your next quarterly statement. Make sure you're registered with Vanguard. I'm sure this is a busy slide that you can't see all the detail, but when you go to Vanguard to register, you're going to need the plan number, and that's there in the middle in blue. It's 093264. And I'll show you how to access some of the My Profile and beneficiary designations on the demo that we'll be doing in just a few minutes. So again, for non-investment related questions, we here at Christian Brothers Services are happy to take your call at our 1-800 number or by emailing us at our RPS customer service email address. But if you have specific investment questions or you need to make investment changes, please contact Vanguard directly or log into your account. You decide how much help you need. You can let Vanguard do it for you, and it starts with the target retirement funds, which I talked about are adjusting over time without you having to do anything. There's also the option to join the managed account program. Now, it's referred to as Vanguard's managed account program, but it's actually overseen by Financial Engines, which is an independent third party. And there's also the option for some financial planning services at Vanguard. But if you want to do it yourself, they have some great questionnaires and some personal online advisors. Vanguard has a great suite of tools and calculators that are available to you. So again, I encourage you to get logged into your account so you have access to all this great information. A new service that Vanguard just added is called Financial Wellness, and you'll see lots of great articles and guides that you can read at your leisure that help understand financial wellness. So let's do a quick demo of the Vanguard site. So when you log in, if you haven't made an update to your beneficiaries, then Vanguard will probably remind you to please make sure your beneficiaries are up to date. Where you should start is going to My Profile. So under My Profile, you've got all your personal information. So you want to make sure your email address, your home address, any banking information is up to date. The banking information is helpful if you're going to be taking any distributions from the plan and you want them direct deposited into a bank account. Having that information in your account is a good idea. Keep in mind, however, that once you have access to your account, it may take up to 14 days to set up that bank account information. Again, here under the My Profile, you can go to the Beneficiary tab and you can edit or add beneficiaries. So you can add a primary beneficiary, you can add contingent beneficiaries. Vanguard takes the security of your information very seriously. So under the Security tab, you can reset passwords or reset security questions, set up security codes. The other thing is that your quarterly statements are online, but if you wanted to change how any of the communication is sent to you from Vanguard, you can do that by editing the communication preferences. So you can sign up for e-delivery or you can sign up for paper delivery, and you can select that for any of their various forms of communication. So back on the home screen, you'll be able to see a very quick snapshot of your investments. This is a sample employee, of course. But you can also see if you have other accounts with Vanguard, they can all be showing up on your account under one login. You can see any prior statements that might be available. Again, as a sample demo, there aren't any. But I did want to point out that you have the option to run an on-demand statement if you want. And then it will take up to 24 hours and you would have access to that downloaded on-demand statement. So back on the home page, you can see plan communications as needed. And your location doesn't offer loans, but in this sample, there is a loan feature. So on the next tab of Manage My Money, this is where you can look at your performance, you can change your investments, you can look at your transaction history. If there's any tax documents that you're looking for, those can be found on this tab as well. You would go to the Access My Money tab if you were looking to get information about a withdrawal. So again, in this demo, it assumes there is a loan option, but you do not have that feature. But if you wanted to look for information about a withdrawal, you would click under Access My Money and Loans and Withdrawals. On this tab is the financial wellness that I referred to. So there's a lot of great resources here that, again, you can just come in and review at your leisure. How do I set financial goals? How much does an employer match help? So as we mentioned, your employer is providing a match, so you want to make sure that you're saving enough to take advantage of that match. And the resources go on and on. Vanguard's website will also help you take a look at planning for retirement and seeing if you're on track. I'm not going to go in great detail on this tab, but there's a lot of information that you can preload into this account. It can include information from other employers, spousal information, and then it's all here in one place so that you could model variations on your retirement goals. What retirement age? When do you expect to start collecting Social Security? And again, with Vanguard, there are many other sites that can provide information to you to help you understand retirement planning. There'll be plan communication documents and plan rules. So we certainly appreciate the opportunity to serve you at the Diocese of Des Moines. If you have any questions, please feel free to reach out to us at 1-800-807-0700. Thank you.